folks, Scott here, and this is the wrap for Wednesday, May 15th. So the market is still live. I'm going to do my webinar on showing historical probabilities on where an index may close if its gap fills. I'm going to do that in a little bit. So the market is still live. You may see this wiggling here a little bit, but one thing is pretty clear is that with this bullish continuation today, we're going to close again more than 1.5 percentage points of the value of the index above its 10-day moving average. So closing 1.5% above the 10-day moving average. I thought this would be helpful and interesting to basically represent a stretched bullish market, and which is not all that unusual, but show you the results of fading gaps in both directions following such a scenario. So above the 10 and 200-day moving averages and at least 1.5% above the 10-day moving average. Get the Gap Trader, my backtesting tool, which, by the way, we've got a webinar next Wednesday on Gap Trader and Range Trader. If you're a do-it-yourself kind of trader, check it out. It should be on our calendar. If it's not on by close of business today, certainly by this weekend. So be sure to sign up and watch your email. All right, there you go. So it's happened 300 times. So indeed, not an unusual setup. What's unusual is on such a large sample size to see such a high win rate, right? And it's made twice as much as this loss. Profit factor right at 2, 80% win rate, and a little bit more likely to gap down following such a scenario. However, a gap down has above average win rate, right? The average win rate for all gaps is 70%, and profit factor is 1.3. Not overly profitable, but certainly nothing to shy away from based upon this one particular study. However, a gap up is something that should be loved, caressed, encouraged. So you get the idea. This is something you want to be taking, okay? It doesn't mean they all work. We certainly have had a number of them lately that have not worked, but I think it's more of an anomaly. Market goes through periods like this where it gets tough. We got back on track today, which was good. And you can see if we get a gap up historically, 86% win rate, 3.8 profit factor. Those are strong numbers. Now, caveat, this is based upon using an end of the day stop, not something I recommend, but a good place to start your analysis. As always, I'll defer to our gap guides and my other analysis before making a decision to trade tomorrow's gap or not. But there's a nugget to consider as we continue to rip to the upside. All right, let me show you what our worksheet showed going into today. The worksheet's the first thing I look at each morning. It's a summation of all the 8 individual gap guides. And a couple of things stood out. I actually looked at it last night. Sometimes I look at it in the evening too, because I posted around 6 p.m. Eastern time most days. And you can see 47% chance of gapping up. That's what these 2 opening areas are, versus 53% chance of gapping down. It may not sound like much, but if you do the math, it's pretty significant. On such a large sample size, right? We're looking at thousands of trades. So decent delta there, slight bias for gapping down. And a gap down, unfortunately, was not nearly as attractive as a gap up. You can see it was a no-brainer to consider shorting an up gap today. A gap down, though, not bad, but between the close and the low, there are actually 2 zones in the gap guides. I'm going to show you those real quickly because the zone really mattered today. Now, before I do that, look at these other considerations. Down gaps, Wednesday of options expiration week, strong numbers historically. Down gaps after an unfilled up gap, strong number historically. Down gap after the widespread 7-day, the widest range day of the past 7 days, very strong historically. So 3 positives. And let me show you the gap guides. We were opening in the UCO zone. UCO zone, it means we're opening between the close and the open of a prior up day. That's inside the bottom of a green candlestick. Weighted average of my 3 systems, very solid, 73% win rate, 1.4. Remember, this assumes a stop of at least 5 points or 30% of the 5-day average to range. So for today, it was 5 points. It's been a strong setup historically. Extended targets, pretty good as well. I'm looking for these numbers to be at least 80% of these numbers. In fact, the worksheet is really where I generally make that decision. See, 80% and greater than 80. That means the extended target averages were at least 80% of gap fill, and historically, just from crunching the numbers, that's meant we've generally made more money going for extended target. That's just sort of a simple tip there. So good setup in the ES, good setup in the YM, confirmed. Slightly attractive, almost an attractive setup. It doesn't quite meet my criteria because profit factor is a little less than 1.3, but still not bad there. for the NASDAQ, and then the Russell was neutral. Looking at the ETFs, check, Spider confirmed, Dime is definitely confirmed, NASDAQ Q's confirmed as well, and the Russell's neutral again. So 5 of the 8 met my criteria. Pretty good. I wouldn't say overall attractive, but overall slightly attractive. That's the way I summed it up. In fact, you can see my comments, which I posted around 9:20 a.m. Eastern Time this morning. Let's see. So after range expansion per last night's wrap, that was a positive for a down gap. Large down gaps, meaning greater than 40% of the 5-day ATR after an unfilled up gap. That was one of the few flags I found that showed some risk. That did not come into play, though. We rallied into the open, so this really did not come into play. And then down gaps, first half of May, a little bit of consideration there. So these 2 risk factors, the fact we're going to be opening near that 40% level and the fact I'm going to draw down right now, enough for me to trade it conservatively and not aggressively. That's what I basically said here. I'll fade the ES with the reduced position size. That said, I did trade in all of my different accounts. It was such a good setup. My mechanical system did take it, and I traded all my other accounts I could as well. So pretty good setup as long as at least 1.5 points of opportunity. And did not end up needing a larger stop. I used a 5-point stop. And let me get back over here. So the white line is where we opened. A little bit of heat and Russell, then it filled its gap, continued higher. It's come back down now. Small gap down is 3 points. We opened at 1645. I was actually filled with 1 tick of positive slippage, 1644.75. Gap fill was the blue line, which is hard to see, 1648, because it represented pretty much this was an entire 15-minute and first hour range. That's part of the reason you had so much momentum to the upside when it broke through. And just getting those other indices set up in case you happen to trade the other ones. NASDAQ has been the one that really hasn't been as bullish. But here's what I set it up. I had, unfortunately, a friend that used to work for us died this weekend, and there was a memorial for her today, and I had to leave early today. So my plan was, I mean, there's a lot of emotion when someone dies, and I've been pretty upset by it. I just didn't want to have to worry about the trade. So even though the data favor the extended target, as I originally set it up, I went for the full position and gap fill. I just wanted to hopefully make my 3 points, get back on the winning track, and go about my day and focus on my friend. Once I got into the trade, here's what happened though, which made me change it. Got into the trade, it went right up and just narrowly missed filling the gap and then rolled back over. And I told people at that point, since I hadn't been filled, I know I've seen this setup work many times. It doesn't always work. But at this point, odds were the open would hold, and we even had 15-minute range numbers, low fade, that favored it as well. So that was another bullish factor. And end-of-day studies that I'm actually discussing in a few minutes show that today's particular setup favored closing above the prior close. 60% chance of closing above the prior close. So you take all that consideration as I processed in the trading room. I said, folks, you know, honestly, at this point, since it hasn't filled, if it gets back up, it'll probably continue through. I'm going to hold half the position for extended targets. A pretty aggressive move. Just had too many factors that were bullish for me to not hold some of the position. Decided to trade it aggressively. Left my stop alone to take some heat. It is the heat gap setup. Details in the members download area. And I was happy when I came back this afternoon to see that my extended target had been hit for +5, in addition to making almost 3 on the first half. So really sweet trade, average of about 4 points per contract, or about $200 per contract. Did not do any range trades or any other probability trades. So that was my day. It was a good day. And there you go. That is the wrap for Wednesday, May 15th.